Hi everyone, a very warm welcome to Buy Now, Sell Now, the weekend edition. I'm Mubina Kapasi.
Hi there, I'm Jani Verma. Well, we have lots lined up on the show. First up, let's tell you about the stocks that we'll be discussing. On the show, we have KEC International, Delta Corp as well as Cipla and Bharat Forge. These are the stocks that we'll be discussing with our experts.
And on our portfolio segment, we'll be discussing Chandan Jagani's portfolio.
And to address the portfolio as well as answer those stock-related queries, we have Ashish Maheshwari, Director, Blue Ocean Strategic Advisors, as well as Chandan Taparia of Anand, Rathi Financial Services. Gentlemen, a very warm welcome to BNSN Weekend. Well, first up, we have a question from Upendra Gadia from Mumbai. He's bought about 7,000 shares of KEC International, which he bought at a price of 47.8 rupees per share. And he has a time horizon of about 6 months. Ashish, would first like to get in your thoughts, and just with the fundamental perspective, what's your view on KEC International? Upendra is clearly making a lot of money on this one.
Yeah, really, investor has got this stock at very attractive price, because in last 1 year, stock has not, went below 100 rupees per share. So in my view, you are making very good profit, but still you can continue to hold the stock. Again, the reason is this quarterly numbers, if we see in Q1 in profit, like it has almost doubled for this particular company. Besides this, whatever the corporate restructuring was taking place, it is also now done in this company. They have fresh orders of almost 2,300 crores. And another thing is, in power transmission side, they are having almost 50% of the book, which is India, and 50 is again overseas book. And Indian transmission tower companies are now flush with orders. So in my view, you can continue to hold this stock for next 6 months. I'm again expecting stock can touch to 170, 175 mark. And at that time, you can book profit once.
Okay, that's a call coming in on KEC International, but getting a check on the technical side of the stock and how it's performed. If you'll just pull up 1 week, it's been more or less flat, just down by about 0.19%. But getting a check on how it's done on, let's say, a 1 month basis, well, it's still down by about 3.5%. No real substantial moves coming in for this one. But 6 months, however, the stock has done pretty well. A good 32% of an up move coming in. So good returns given by this stock. Chandan, coming on the technical side of KEC International, what would you recommend?
Yes, the stock has recently bottomed near to 100 zone in the month of Feb and March, and made high near to 150 in the month of July. So after the strong move, the stock has been consolidating from last couple of weeks, and I think the trend may remain positive. It has multiple support near to 127, 130 zone. Until that level is being held in the counter, I'm expecting it to move towards 168 to 180 kind of zone. So I'm suggesting him to hold the position. Holding above 145 may start the fresh leg of rally. I'm looking for target of 168 and 185 on the higher side.
Okay, that's the word coming in on KEC International by both our experts. Well, let's move on then and answer our second query coming in from Harin. He lives in Mumbai. What he wants to know essentially is the long-term and medium-term outlook for Delta Corp, Cipla as well as Bharat Forge. 3 stocks is what he wants to know about. Ashish, first up, your thoughts on Delta Corp as well as Cipla and Bharat Forge.
Maybe all these 3 stocks are good stocks, and they have come out with decent set of numbers. And in last 3 months also, if you see the performance, all have really performed well. In fact, Delta Corp has gone up by almost 80% in last 3 months. So it has given fantastic returns. Again, their profitability for this quarter was one of the highest they have ever achieved. And once their second casino gets operational, from 100 crore kind of profit, which they are expected to report this year, it will be almost 150 crore. So in my view, still steam is left in Delta Corp, and you can buy even at this price. As far as Cipla is concerned, again, this is a stock which has also given almost 20% kind of return in last 3 months in Pharma Pack. Where if you see other peers, they haven't done that well, but still there's good probability that this stock will do well. If you see even the business profile of the company, they have 1,000 plus product presence in almost 100 plus countries in the world. And another trigger which might take a stock to new highs is, again, there are some talks that Cipla and Vocard can merge or find some synergies in between. So the momentum will be there in this particular stock. As far as Bharat Forge is concerned, again, the Q1 numbers were not that good, but because of defense and now revival in CV sales, in domestic market, again, Bharat Forge will continue to do well in Q2, and though this year is going to be flat, but next year onwards, once defense orders or the big ticket orders will start getting executed, we are going to see good set of numbers. So this is the reason the stock has moved by almost 15% in last 1 month, and in my view this will again do well in short to medium run.
All right, that's a fundamental call coming in from Ashish on Delta Corp, Cipla as well as Bharat Forge. But Chandan, come in on these three stocks as to what the charts are recommending.
Yes, charts are quite attractive and interesting in terms of price pattern for all these stocks. I'm expecting a short to positive move in all these stocks. If looking for the short term to medium term point of view, these stocks are having the potential to move by 10 to 15% on the immediate basis. First, talking about the Delta Corp, the stock has surpassed 2010 high of 140-190 and given the fresh breakout and now hovering near to its lifetime high territory. The stock has given the multiple year breakout, and that's why it looks attractive for a strong rally. On immediate basis, I'm looking for target of 175 to 180, and then positional basis, the stock can even go towards 200 kind of level. So he can hold the position. The way stock has given the breakout, it looks attractive for target of 175, 180. As per the supply is concerned, the stock has seen the strong momentum. It has formed a positive price pattern. On 60th of August, the stock has rallied by around 10%, and in that rally, fresh build up of long position was seen with rising trading and the delivery volume activity. So looks quite attractive on the counter. One can buy or can hold the position for target of 575 and 600 level, but the better strategy would be buy on decline near to 550. If someone is holding the position, can wait for target of 600 levels. Now talking about the Bharat Forge, the stock has not performed in last 12 months, but now negated the negative trend. Earlier it was making lower top lower bottom formation, but the way it has surpassed the immediate hurdle of 820 840 zone now looks attractive for the next leg of rally. Stock has made bottom near to 700 720 zone, and now as per its price pattern, it is well placed to head towards 965 to 1000 level. So he can hold for Bharat Forge. I'm looking 20 to 25% return in the counter, looking for target of 965 to 1000 levels.
Okay, an optimistic call coming in on all three stocks. Thanks for that. Okay, let's address the last and final query from Mamta, who lives in Bangalore. She wants to start investing in stock markets and wants to know 2 or 3 stocks which she can purchase at current levels. Well, here's a question that is going to be interesting a lot of our viewers who want to start investing. Let's make a note that Mamta has a time horizon of about 1 to 2 years. And given that's the kind of horizon that she has, Chandan, first up, would like to get in your thoughts. 2 stocks that Mamta should be investing in.
Yes, talking about the immediate trading, I think selective housing finance, capital engineering stocks are likely to perform. We are positive on most of the housing finance companies, especially DHFL, LIC Housing Finance, Bharat Financial. Here I'll suggest to go long on DHFL. The stock has recently given the breakout, looks strong, making higher tops, higher bottom formation. Rollovers are on positive side, so one can buy for the target of 350. Second recommendation would be on Voltas. This stock has seen the strong momentum, continuously heading on higher side. Overall trend is positive, looks quite strong for next leg of rally towards 425 to 450 zone. So one can also buy with Voltas. And the third trading idea would be buy on SCL Tech. Most of the IT company has seen the profit booking, especially Infosys, TCS, Wipro, Tech Mahindra. But SCL Tech is only counter which is having the potential to outperform the broader market. Earlier it rallied by crossing the multiple hurdle of 720 and headed towards 550, 858 kind of zone. And this recent decline is again giving the opportunity. I'm looking the stock to find support near to 750, 760 zone. One can buy near to those level for target of 950 on the positional basis. So here recommendation is buy on DHFL, Voltas and SCL Tech on decline.
All right, 3 stock recommendations coming in from Chandan, but let's also get in a fundamental perspective then from Ashish. Ashish, a first-time investor with a time horizon of about 1 to 2 years. What are the stocks that you would recommend?
Yes, 3 stocks which I have identified for such investor is one from NBFC space, one from chemical and one from IT and training. My first pick is Reliance Capital. This is a company actually in NBFC space which hasn't done that well compared to peer set. If you see, this company is still available at 12,500 crore market cap, which service if you see Bajaj Finserv, which is almost 45,000 crore market cap. And Reliance Capital is not only into consumer finance business, they are into multiple activities like mutual funds or broking or asset reconstruction, etc., and insurance also. So a lot of value unlocking which is going to happen now in Reliance Capital. That is why we have seen good amount of momentum in the stock, and next 1 year momentum will continue because a lot of value unlocking will take place in Reliance Capital. So my target for the stock will be around 700 if investor can hold for 1 year. My second pick is from chemical and fertilizer space, which is Tata Chemical. This is again a stock which is showing a lot of momentum nowadays, and going forward also because of the businesses it will be left after selling of urea business. They will be left with fertilizer, they will be left with chemicals and consumer products. And these all businesses are really doing well in Indian market as well as in overseas market. And mind it, this Tata Chemical is again a global company which operates in almost all the continents. So in my view, post this restructuring, this stock is again going to get re-rated, and in next 1 year it can touch 725 to 750. Now my third stock is Aptech Limited. This is a stock again near to 50-day week highs, and again here the triggers are that some organization restructuring is happening where new top management is coming is already there now, which is going to lead the company. And now the forte of this company is going to be software testing as well as VFX and e-commerce related education, which has got tremendous potential. So no wonder this stock has also moved up by 100% in last 3 months, and again I am expecting 50% kind of rise again possible in next 1 year time. So these three stocks from my side for 1 year.
Okay, so there you have it, Mamta. Lots of recommendations coming in from both our experts. Let's slip into a short break at this point of time, but on the other side, we'll be discussing a portfolio. This time around, it's Chandan Jagani's portfolio. Stay tuned for that.
Welcome back. Thanks for staying on with us.
Well, on our portfolio advisor segment, let's now address Chandan Jagani's portfolio, who's about 25 years old. He's a shopkeeper by occupation, but he has a long-term horizon when it comes to the stock markets. 10 years is his horizon. Let's take you through which are the stocks that he has in his portfolio. First up, he has FDC and 100 shares of that, which he bought at a price of 188. He also has about 100 shares of Tata Global, which he bought at a price of 135. Add to that list, it's KE Industries, again 100 shares bought at a price of 135 rupees per share. He has 500 shares of Tin Plate, which he bought about 65 rupees per share. From the real estate space, he has Simplex Realty, which he bought at a price of 79, and the quantity that he has is about 500 shares. Migmani Organics, add to that list, 45 was his buying price, and he has about 1,000 shares of this one. Geojit BNP, 1,000 shares of this one, which he bought at a price of 39.5 rupees. EPC as well, 1,000 shares of that, bought at a price of 152. He bought about 100 shares of Forgings at a price of 420 rupees. So clearly, the bias seems to be on the mid-cap and the small-cap space. No big names clearly found on his list. Ashish, would first like to get in your thoughts on the first three stocks that Mr. Jagani has in his portfolio. It's FTC, which he bought at a price of 188. Some marginal profit happening here. Tata Global Beverages, again, he's making a little bit of money, not too much. However, KE Industries not been a big call. The stock has actually just halved his buying price as well. What is it that you would like to suggest to him?
I think plenty of stock in his portfolio, and a lot of small cap and mid cap stocks also there, which ideally actually, if you ask me, are not suited for if you are having a time horizon of 10 years, etc. So some restructuring need to be done in the portfolio. Now we'll talk specific to stocks. First is FDC. I think this particular portfolio is also made very recently because almost all prices are near to the buy price only. FDC, if you see, is one of the most underperformer in pharmaceutical stocks. Though company is good, management is good, product portfolios is good, but is still stock is not performing. Instead of this, if you're having that much time horizon, why don't you look at Biocon, which is doing much better in pharmaceutical segment, and a company has so many biosimilars lined up, and this will take a stock to new highs. And besides this, this particular company is having excellent management and a lot of good product line, which is quite necessary for a pharmaceutical company, that they should have good filing for export market. And Biocon deserves all those points. So in my view, for long-term point of view, sale FDC, switch to Biocon. As far as Tata Global is concerned, this is a good pick in your portfolio because they are world's number 2 beverage manufacturer now, with almost 15 brands in tea, coffee and water segment, and the company is doing well for last 1 year, and I'm expecting good performance even will be there in long run from Tata Global, so you can remain invested. As far as KE Industries is concerned, again a small cap company with 65 crore kind of market cap. In my view, these kind of stocks doesn't hold merit to hold for such a long horizon. They are good for trading, etc., but not for really good long run. So in my view, better to shift from KE Industries to Cipla, which is again looking very good in pharmaceutical sector and really has got good and bright future in long run. So these are my suggestions.
All right. So sell FTC and replace it with another pharma stock like Biocon. Hold on to Tata Global Beverages because after all, it is a very fast growing company. And lastly, sell off KE Industries, a micro cap company at that one, and replace it with a pharma company like Cipla. Moving on, let's get in a check on the rest of his 3 stocks. He has Tinplate by price at 65, where he's making a good amount of money over there. Simplex Realty at 79 rupees, more or less at the money on that stock. And Meghmani Organics, 45 rupees is his buy price, but a whopping 1,000 shares, which is a pain point for him. Ashish, come in on these 3 stocks.
Yeah, Tinplate is still a better company because again part of Tata Group, and they hold almost 40% market shares in tin coated steel sheets. So in my view, whatever restructuring happened in Tata Metaliks or Tata Sponge, someday this company will also get merged with any of Tata Group companies, and this is the reason some momentum is there in Tinplate compared to other players in this particular sector. And again, company is debt free, so in my view you can continue to hold this stock expecting some corporate action over a period of time. As far as Simplex Realty is concerned, this is a very liquid kind of stock and doesn't hold merit to hold for long-term portfolio. And they are having just only one project running in Mumbai in Malad area, and did another project which is completed now. So without much projects in hand, etc., we should not buy this stock. And if you want to buy something in reality, why not look at DLF, which is again market leader and at least have visibility for longer horizon, and company is doing a lot of efforts to reduce their debt. So once all the exercises are done, DLF will come out with one of the strongest company in reality pack. So my suggestion will be to exit Simplex and come to and shift to DLF. As far as Meghmani Organics is concerned, again, these are the stocks which are quite seasonal in nature. See, for last few years, company was not doing that great, and stock was hovering in range of 10 to 15 rupees only. But as now there's a uptick in chemical cycle, so these stocks have started, going up. But still, in my view, whatever the upside was there in these chemical stocks or in the small cap chemical stocks already captured. So if you are having 10-year horizon, I don't think so this deserve a merit. And instead of this, why not look at Tata Chemical, which is having good future prospects, as well as in my view, this stock can be a multi-bagger from there. So my advice will be to exit Meghmani and shift it out at chemical in same space.
That's the call coming in. You could hold on to tin plate. However, Simplex Realty as well as Make Money Organics exit out of both these stocks and instead invest into DLF or Tata Chemicals. Let's move on and discuss the next three stocks that he has in his portfolio. It's Geojit, BNP, as well as EPC, which he bought at a price of 152, Forgings as well. He's not making money on any of these stocks and he has a horizon of about 1 to 2 years. Should he hold on to these stocks?
Yeah, in my view, Geojit is a company which is purely brokerage company. They are not part of NBFC typical bull run that we have seen. But as all financial services stocks were doing good, so Geojit was also moving. But in my view, if you are having 1 to 2 year time frame, it won't go to your desired levels. Why don't you look at again Reliance Capital, which is much better company, and a lot of value unlocking will take place. So the kind of run up which we have seen in Bajaj Finserv and some other NBFCs, you can expect in Reliance Capital, and surely it won't be case of Geojit. So better to sell Geojit and shift to Reliance Capital. As far as Epic Industries is concerned, again a Mahindra and Mahindra group company, and they are into micro irrigation kind of businesses. Only thing is the stock is slightly liquid and only listed at BSE, so not too much institutional participation is there. But going forward, as sector is good, I think you can continue to hold this stock. Again, Forging is I think a very old company and doing reasonably well with consistent profitability, etc. So you can continue to remain invested in Forging because this auto ancillary sectors is again gaining momentum, and 1 to 2 years looks really good for auto ancillary sector as a whole also.
All right, those are some recommendations coming in from Ashish. Buy on Reliance Capital, and you can hold on to Forging as well as EPC. Mr. Jagani, I hope you've taken note of all of these recommendations. Now, do remember that this portfolio recommended here is a model portfolio, and please do consult your individual investment advisor before taking any investment decisions. Let's slip in a short break, but on the other side, we will get you some more ideas and recommendations from our market experts. Welcome back. Thanks for staying on with us on BNSN.
Well, time then to get you some individual recommendations from our experts. Chandan, would first like to come to you. What is it that you would like to suggest to our viewers in terms of investing or trading in the coming week?
Yes, talking about the trading idea, I have selected two stocks which are bottoming out, but yet not performing the entire market movement. Nifty has been finding some pressure at higher level, but there are selected counter which are now forming the bottom process and has potential to move by 8 to 10% on immediate basis. Here I have selected to buy on Ashok Leyland. This stock was making lower top, lower bottom formation, but I'm getting an early sign of bottoming process because of the multiple support near to 85-86 zone. If it manages to hold above 89, 50, 90, then the stock may start the fresh leg of rally on the higher side. Earlier it corrected from 113 to 85 levels and looks quite attractive in terms of risk reward ratio. So recommending to buy with a stop loss of 84 for the upside target was 95 and 97 kind of level. And second trade is buy on GAIL. This stock has negated its negative trend of last 3 to 4 weeks and taken multiple support near to 365 zone. It also seen the positive rollover with rising trading volume, which indicates that longs are heading into the position. One can buy GAIL with a stop loss of 370 for target of 395 levels.
All right, those are some recommendations coming in from Chandan. It's Ashok Leyland as well as GAIL. But Ashish, come in on some recommendations that you'd want to give viewers from a fundamental perspective and probably for some people who have a more longer term time horizon.
Yes, two stocks which I have identified. First is SRF Limited. Stock is doing good. For last 3 months, the stock is almost up by 35 odd %. But going forward also, I am expecting this stock can go to even places. Again, if you see the business profile of the company, they are having 5 business verticals which are doing extraordinarily well. If you see, they are having technical textile, they are into fluorochemicals, they are into specialty chemicals, they are into engineering plastics, and they are into packaging. And in Q1, a company came out with very good numbers when net profit went up by 27% and EBITDA margin went up by 200%, which is again phenomenally good. Company is investing almost 350 crore in their Dahej facilities and setting up 2 new projects to meet the growing requirement of chemicals. So in my view, last year they reported EPS of 73 rupees and this year they won't be reporting EPS of less than 100 rupees per share. So still you are getting a quality management and good product portfolio stock at less than 17 price earning multiple from FY17 earnings. So it's a good buy in spite of this rise. My second stock is Tata Communication. This is a stock which is at almost 7-year high, and in my view this will again give very good returns going forward. Two rationales. One is now a lot of emphasis is being given for data services, and being a major data service provider, a lot of businesses now coming to Tata Communication. Besides this, a lot of government data which was generally stored in foreign servers is again getting shifted back to Indian hosted company server, which is again natural choice is Tata Communication. So this is a business which will grow by at least 40 to 45% CAGR for next 2 to 3 years. And another trigger which is there in this stock is the BSNL land demerger, where the valuation per share is priced between 100 to at least 125 rupees per share. So all those things are positive, and doing re-rating of this stock, I'm expecting in next 1 year almost 150 rupees rise from present valuation. So both are good, fundamentally strong buys.
Okay, those are some wealth creation ideas coming in from Ashish, and with that, would like to thank both our experts for taking the time out and sharing their recommendations with us on Buy Now, Sell Now weekend. And with that, it's a wrap. Would like to thank our viewers for watching the show. We'll catch you in the coming week.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.